Hey everybody, John here from UrbanDigs for your weekly market update. This is a special one. This is sort of the first one we have in July. We're going into a holiday weekend. We're closing out the month of June, and of course it's the end of the quarter. So we got a lot of stuff happening. I'm going to jump right into it. We're going to start with supply. Supply is coming in at 6,389. That's an increase of about 7% from last week, about 400 or so, as you can see on the chart in front of you. So that's the good sign. That's how the recovery is going to start. First, the listings come on, then they go into pending sales. So it's going to take a while for that pending sales number to catch up because remember, pending sales is sort of a pipeline number. That's deals get in and it takes them a while to get back out. So what we're seeing now as deals close is the unwinding of the pipeline from the early part of the corona phase and some of the deals now. But we're not going to start building that up until we get more on the market, get the buyers back in. Speaking of which, pending sales coming in at 1,540. That's again, that's just a decrease. We're going to see that number start ticking down as again those pipeline sales wind out. Really, the interesting number to watch here is the weekly one. So weekly new actives, which I'm going to pop up there, 423. You can see right there. So it's down from last week, but the trend is certainly up. Sellers are out, getting those listings on. Again, that's a great first sign in terms of market activity recovery. I'm not talking prices. I'm talking activity. We want to get those listings on so we can get the buyers in, narrow the spreads, get some price discovery. That's gonna really kick market activity into high gear, hopefully. Where's it gonna be? I'm not quite sure, but if we look at weekly contract signs, again, they're coming in low still, 54 this week. That's really not surprising. We're not gonna see that number in terms of weekly activity start to pick up until we get the buyers out for a little bit longer than a week. I mean, look, it's July 2nd, it's a Friday. It's a holiday weekend. No one's really shopping. It's not going to happen this week, and next week's number is probably not going to be terribly exciting either, but it's going to take a while, and that number is finally going to tick up. We're going to see some activity. There's going to be a rebound. That's just the way it is. But I think what's really special here is the quarterly market reports. That's going to hit. If they haven't hit already, they're going to be hitting next week, and they're going to be all kinds of crazy. Why are they crazy? Well, we are comparing a COVID quarter with an incredibly small sample size to a rather robust first quarter, where we saw the market actually start ticking up. So we're going to see some discrepancy there. And don't forget, and I'll show you some stats. You can see the stats on your screen now, but don't forget last year, because everybody forgets about this. Last year, July 1st, mansion tax increase. We had a ton of sales hit June 30th. Try to beat that deadline. So we had a huge spike in expensive sales, a huge rush. What does that do? That artificially spikes up our median price. That's going to come crashing down based on the last quarter this year of the COVID sales. So you're going to see numbers down 25%. I mean, look at right here. These are just, it's on your screen right now. These are kind of crazy numbers. There is going to be a ton of confusion out there. So I hope you can kind of pass this on to your clients that these numbers that you're seeing right now are not indicative of where the market is post-corona. These are indicative of sort of statistical dynamics between a rather robust first quarter, an extremely tight, small second quarter, versus the year ago, we just had a gangbuster second quarter because we had a lot of expensive sales. So these numbers really should be put into context. If you're looking at days on market, frankly, it's going to be a useless number for the foreseeable future until we can sort of recover a sense of balance in the market because everyone's counting as one. So until we get that sort of out of the system, days on market is going to be very tricky to judge. All right. Well, I hope every one of you have a productive and happy and safe 4th of July. And this is John, and we will see you next week. Thank you very much. Bye-bye.